Welcome to the Abroad in America podcast, the only financial podcast designed specifically for expats living in America, where you go behind the scenes with financial planner, author, and speaker Jimmy Miller to learn how to make your time in America as financially rewarding as possible. And now, here's your host, Jimmy Miller.
Hey everyone, welcome back to the Abroad in America podcast. I'm your host, Jimmy Miller. Today we're talking about something that surprises almost every expat who moves to the United States: credit. More specifically, we're talking about how to build credit in America when you arrive here as a foreign national. And this is one of those topics that sounds boring until you actually need it, because you may arrive in America with a great job, a good income, savings in the bank, a spotless payment history back home, maybe even a mortgage you've paid perfectly for years in your home country. And then you apply for an apartment, a credit card, a car loan, or a phone plan, and America looks at you and says, "Sorry, we don't know who you are," which is a very strange experience. You know who you are. Your home country knows who you are. Your bank back home knows who you are, but the American credit system, not so much. So today we're going to talk about why this happens, why credit matters so much in America, and how expats can build a strong credit profile without accidentally creating financial problems along the way. So let's start with the emotional reality. For a lot of foreign nationals, the U.S. credit system feels unfair. Wherever you came from, you may have spent years being financially responsible. You paid your rent on time, you paid your mortgage on time, you never missed a bill. You may even have credit cards back home. You were a grown adult with a financial life. Then you arrive in America and suddenly feel like a teenager applying for your first bank account, and that's frustrating. But the reason is simple. The U.S. credit system is mostly built around U.S. credit reporting. American lenders usually want to see information reported to the U.S. credit bureaus. So if you hadn't had accounts in America that report to American bureaus, you may have what's called a thin file or no credit file at all. In plain English, you're not necessarily bad credit, you're invisible credit. And invisible credit can be almost as inconvenient as bad credit. So what is credit? The simple answer is this: credit is America's financial reputation system. It's a way for lenders, landlords, banks, and other companies to decide whether they trust you to pay them back. Your credit history shows how you've handled borrowed money over time. Have you paid on time? Have you used too much of your available credit? Have you opened a lot of accounts recently? Have you had credit for a long time? Do you have different types of credit? All of that gets reported into your credit profile. Then a scoring module turns that profile into a number, and that number can affect a lot more than people realize. It can affect whether you qualify for a credit card, whether you get approved for an apartment, the interest rate you get on a car loan, whether or not you can buy a house, and it can even affect how much of a deposit you might need for things like utilities or a mobile phone plan. In some countries, if you have money and income, that's enough. In America, income does matter, but credit often matters too. And here's one of the biggest mistakes that expats make. They wait until they need credit to start building credit. That's like waiting till you're hungry to plant a garden. It doesn't work so well. If you plan to live in America for more than a year or two, you should probably start building credit as soon as possible. Not because you need to borrow money or because debt is good, or not because you should go out and buy things you don't need, but because credit gives you options, and a strong credit profile can make life easier for you. It can make renting easier, buying a car or home easier. It can lower your borrowing costs and reduce deposits as well. It can also give you flexibility if something unexpected happens. And for expats, flexibility usually matters. You're already navigating visas, taxes, banking, healthcare, retirement plans, and an entirely new financial system. Don't let credit become one more surprise. Now let's clear up two terms that people often mix together: your credit report and your credit score. Your credit report is the detailed record. It shows your accounts, your payment history, your balances, credit limits, inquiries, and other information. Your credit score is the grade generated from that information. Think of the credit report as the exam paper, and the credit score is the grade at the top. There are three major credit bureaus in the United States: Equifax, Experian, and TransUnion. You may have information at one of them, two of them, or possibly all three of them. You may have had multiple credit scores as well, because different scoring models exist at each bureau. That's another annoying American wrinkle. There's not just one magic score sitting in a vault somewhere, but the general principles are similar. Pay on time, keep balances low, don't apply for too much credit at once, build some history, and be patient. That's the game. Now let's talk about what actually affects your score. The first and most important factor is payment history. Do you pay on time? This is huge. A single missed payment can hurt, especially when your credit history is new and there isn't much positive history to balance it out. So rule number 1 is boring but powerful. Pay on time every time. The second factor is amounts owed, often called credit utilization. This means how much of your available credit you're using. For example, if you have a credit card with a $1,000 limit and you have $900 of balance on that card, that looks risky. Even if you plan to pay it off, the system sees that you're using 90% of your available credit, and that can hurt your score. So keep balances low compared to your credit limits. The third factor is length of credit history. The longer you have accounts open and in good standing, the better. This is why starting early matters. Time is part of the formula. The fourth factor is new credit. If you apply for 5 credit cards, 2 car loans, and a furniture store card in the same month, lenders may get a little bit nervous. It looks like you're desperate for credit, even if you're just trying to build history. The fifth factor is the credit mix. This means having different types of credit, like credit cards and installment loans. But don't overthink this one at the beginning. You don't need to take out a car loan just to improve your credit mix. That's letting the credit tail wag the financial dog. Start simple. So, how do expats begin? First, get into the U.S. financial system. That usually means opening up a U.S. bank account. You typically need identification, proof of address, and often either a social security number or in some cases a tax identification number. Rules vary by institution, and some banks are more expat friendly than others, but having a U.S. bank account helps create a foundation for you. It gives you a place for payroll deposit, helps you pay bills, it gives you a relationship with a bank or credit union, and that relationship can sometimes help you get your first credit produced. Not always, but sometimes. Now, if you work at a large company, ask your HR or your relocation team whether they have a banking relationship for foreign employees. Some employers have arrangements that make this easier. Don't suffer in silence. Use the resources available. For many expats, the easiest first step is a secured credit card. A secured credit card works like a normal credit card, but you provide a deposit. For example, you might deposit $500 and the bank gives you a $500 credit limit. That deposit protects the bank if you don't pay, but from your perspective, the goal is not to borrow the money, the goal is to create a reporting history. You use the card lightly, maybe one small recurring bill like a streaming service or a tank of gas now and then or a grocery trip, then you pay it off in full every month. That's it. Don't make this too complicated. You're not trying to finance a lifestyle. You are teaching the American credit system that you exist and that you pay your bills. Before getting a secured credit card, though, ask one very important question. Do you report to all 3 major credit bureaus? Because if the card does not report, it might not help you much. You want the positive behavior to show up at the credit bureaus. And this is where I want to kill a myth. You do not need to carry a credit card balance to build credit. Some people think that paying interest helps your score. Let me tell you, it does not. The credit system wants to see responsible use and on-time payments. It does not require you to donate money to the bank in the form of interest. Use the card, let the statement generate, pay the full statement balance by the due date. That's the cleanest habit. Credit cards can be useful tools, but they can also become dangerous quickly. America makes it very easy to borrow money. Too easy, in my opinion. So from day one, treat the credit card like a debit card with better paperwork. Only spend what you already have. Pay it off. Repeat. Boring wins. Another option is a credit builder loan. These are often available through credit unions, community banks, or specialized lenders. The structure can vary, but the basic idea is that the lender helps you build payment history through a small installment loan. Sometimes the borrowed money is held in an account while you make payments, and then you receive the funds later. The point is not really the loan, the point is the reporting. Again, before doing this, ask, does it report to all 3 credit bureaus? What are the fees? What's the interest rate? Can I afford the payments easily? Is this actually necessary for me? A credit builder loan can help some people, but you don't need every tool at once. Start with the simplest option that works for you. Another strategy could be to become an authorized user on someone else's credit card. This is usually a spouse, partner, family member, or very trusted person. If the card issuer reports authorized user activity to the credit bureaus, it may help the authorized user build credit history. But this strategy requires trust, a lot of trust. If the primary cardholder misses a payment or carries a huge balance, that could hurt you. And if you are added as an authorized user and then you spend irresponsibly, you can hurt the primary cardholder. So this is not something to do casually. It can be useful for spouses where one person already has credit and the other is new to the U.S. system and trying to build credit, but it should be discussed clearly. Credit and relationships are a dangerous mix when expectations are unclear, so be careful. Some expats ask, well, what about rent? I pay rent every month. Doesn't that build credit? Well, sometimes it does and sometimes it doesn't. In many cases, rent payments do not appear on your credit report unless your landlord or a rent reporting service reports them. When you rent a place, it might be good to ask if they report your rent payments to the credit bureaus. There are services that may help report rent to one or more of the credit bureaus that you can use as well. This can be useful, especially if you're renting anyway and you want credit for the payments you already make, but check the cost. Check which bureaus receive the data, and check whether late payments are also reported. Check whether your landlord needs to participate, and don't assume it will magically transform your credit overnight. It may help, but it's not a substitute for basic credit habits. The same goes for the alternative data tools. They can be helpful, but the foundation is still the same. Pay on time, keep your balances low, slowly build history. Now let's go through a few other common mistakes. Mistake number 1, using only a debit card. Debit cards are convenient and they help you avoid debt, which is great, but debit cards don't generally build credit or report to the credit bureau since you're just spending your own money. So if you use a debit card, you may be financially responsible, but you're still invisible to the credit system. Now, mistake number 2 is applying for too many cards at once. I understand the instinct. You get rejected, so you apply somewhere else, then somewhere else, then somewhere else. But multiple applications can create multiple inquiries and make lenders more cautious of you, so go slowly. Mistake number 3 is opening store credit for discounts. You're at the checkout counter and they offer you 20% off if you open a credit card. It sounds tempting, but these cards often have high interest rates and limited usefulness. A one-time discount is usually not worth creating a messy credit profile. The 4th mistake is carrying a balance. Again, paying interest is not a badge of honor. Pay in full every month. The 5th mistake is missing small payments. A $25 missed payment can create a much bigger problem than the amount suggests. So set up autopay or set calendar reminders. Build systems so you don't accidentally damage your credit by missing a small payment. Mistake number 6 is only one spouse building credit. And this is a big one. In many expat households, one spouse handles all the finances, opens the accounts, gets the credit card, signs the lease, and builds a U.S. credit profile. Then years later, the other spouse has almost no credit history at all. That can be a problem if something happens and if they need to apply for a credit for something or if the couple's financial situation changes. Both spouses should usually build some credit in their own names, not because you expect something bad to happen, but because adults need financial identities. Now, since this is abroad in America, let's talk about what happens when you leave America. If you move back home, should you keep your U.S. credit alive? Maybe. If you return to America, keeping a long-standing U.S. credit card open can help preserve your credit history. But you need to follow the rules of the financial institution. Some banks and credit card companies may not support accounts for people living abroad, or they may require a valid U.S. address. Don't lie to your bank. Don't try to use fake addresses. Don't create a compliance issue just to keep a credit card. But if your bank allows it, keeping one no-fee card open, using it occasionally, and paying it in full can preserve some credit history. This matters if you might later return to the U.S., buy property, rent an apartment, finance a car, or help a child studying in America. Your U.S. credit history is like that small garden. It takes time to grow. And if you abandon it completely, it may wither. So before leaving America, add credit to your departure checklist. Not as the biggest item, not above taxes, retirement accounts, visas, or investment planning, but somewhere on the list, because future you may be very happy that past you kept the door open. So here's the big takeaway. Building credit in America is not about loving debt or spending money you don't have. It's about creating a financial identity in a country where credit history affects daily life. For expats, this can feel insulting at first. I totally get it. You may have been financially responsible for decades back home. But don't take it personally. This is not a judgment of your character. It's just a system. And once you understand the system, you can work within the system. Open a bank account, start a secure credit card if needed, make some small purchases. Pay on time, pay in full, keep your balances low, avoid unnecessary applications, check your credit report from time to time, protect your identity, and give it time. Credit building is not dramatic and it's not exciting. It's a slow, boring process, which is exactly why it works. And if you do it correctly, you can turn yourself from credit invisible into credit established without falling into debt traps that catch so many people along the way. Now that's it for today's episode of Abroad in America. If you're new to the US or planning to move here soon, start thinking about credit early, not because you need debt, but because you need options. And as always, when financial decisions get complicated, talk with a qualified professional who understands the expat experience. Until next time, stay curious, stay intentional, and as always, keep exploring.
Want even more ideas, tools, and resources on how to navigate your financial life as an expat in America? Check out all the resources on Jimmy's website at baobabwealthabroad.com and subscribe to the blog to stay up to date on issues affecting expats. Don't forget to subscribe to never miss an episode. See you next time. Baobab Wealth and Baobab Wealth Abroad are DBAs of Baobab Wealth LLC, a Florida-registered investment advisor. This podcast is designed for general education purposes only and shouldn't be taken as legal, investment, or tax advice. You should seek out a qualified tax professional or licensed financial advisor to determine what is best for your personal situation.